Happy Monday morning. 30 minutes till the start of the cash trade. I'm Matt Miller.
And I'm Dani Berger. Bloomberg Open Interest starts right now.
Coming up, Nvidia invests another $2 billion in a customer, CoreWeave, ahead of results from Meta, Apple, Microsoft, and Tesla this week.
Shutdown risk rises. Senate Democrats threaten to block a spending package as fallout grows over a second death by ICE in Minnesota.
And under pressure, the dollar drops on talk of coordinated U.S. Japanese intervention, while gold storms up through $5,000 a troy ounce and beyond. So a lot going on today.
So much going on if you've made it into the office, which I know a lot of people in the U.S. have not. Matt, I'm taking a look.
Can't think of any excuse why you wouldn't have made it into the office. You know,
I
got up at 3:30 this morning and drove in from Scarsdale.
Not everyone
wasn't hard.
Not everyone has a four-wheel drive SUV where they can do such things, Matt, just to be fair. Okay, I'm looking at the news that you mentioned, and it was one announced at around 8 a.m. this morning that Nvidia is investing again in CoreWeave. Again, it's customer $2 billion this time. The idea is to help speed up an effort to add more than 5 gigawatts of AI computing capacity by 2030, and we're going to catch up with Ed Ludlow shortly on this story.
All right, really interesting continuation of the circular economy, right? USA Rare Earth signed a non-binding agreement with the Commerce Department to receive $1.6 billion in funding. They'll be using President Biden's CHIPS Act for that. And in case you're wondering what they do, it's all in the name, Dani. They want you to know. It's front and center. This is rare earths.
And USA rare earths at that. It is the holy grail of securing an investment from this administration. Speaking of investments, let's go back to that Nvidia CoreWeave news. As well as Mag 7 earnings this week, Bloomberg Tech co-host Ed Ludlow joins us now. Ed, cue all of the alarm bells again of circular financing. What are the details of this CoreWeave investment by Nvidia?
Yeah. $2 billion investment buying common stock. You know, and Nvidia's done that mechanism before. And we spoke with Nvidia CEO Jensen Huang last night, and his argument for why it is not circular financing is quite simple. He's basically saying that CoreWeave is going to have to raise infinitely more than the $2 billion additional that Nvidia is putting in. So proportionately, it's small. And it's in line with what Nvidia has invested in a number of other AI companies across the stack. You know, it's a great Jensen Huangism to talk about the 5-layer cake of AI. But to his mind, you know, you can see in the quote, he calls it ridiculous to say that it's circular financing. But the point here is that it is to accelerate capacity build out. There's still a situation where demand outstrips a data center's ability to supply. The difference in this, where those that say it is circular financing will focus, is there is a technology access part of this agreement as well.
First of all, I want to point out that I believe Layer Cake is the best of all of the British gangster films. And if you haven't seen it, I highly recommend checking it out. It is interesting, though, that, you know, this is a company, CoreWeave, that buys stuff from Nvidia, right? And now Nvidia is going to be giving money to the company that buys stuff from them to buy more stuff from them.
Yep, and therein lies the true definition of circular financing. But again, you know, to Jensen Huang's mind, this is a drop in the ocean, you know, essentially, and then that in itself justifies it. The technology sharing part of it is that Nvidia is making another interesting move here, which is in the CPU business, good old-fashioned CPU. Right now, Nvidia has a Vera CPU, but it's just one of 6 chips that goes into its overall system. And it's going to start selling that CPU as a standalone offering, starting with CoreWeave. And that's why I say not just the financing part of the deal, but CoreWeave gets the first opportunity to deploy NVIDIA CPU or Vera CPU as a standalone, which is those that would argue, we should look at this more closely, would focus on that technology access piece too.
And it's going to be a very busy week for tech investors, which means all investors, because who's not invested in tech at this point? Microsoft, Meta, Tesla, Wednesday, Apple, Thursday, 16% of the S&P market cap by market capitalization on those metrics. Given the Mag 7's down year to date, Ed, only by 0.5%, what's at stake this week?
Yeah, it sounds boring, Dani, and I'm sorry, but it's the same, particularly for Meta and Microsoft. Capital expenditures, the expectation is that capital expenditures continue to grow in 26, and to justify that, Microsoft through the Azure Cloud Computing Unit, and Meta through AI-driven growth, but its core advertising business need to justify it. With Tesla and Apple, I'm trying to think like what's analogous here. For both of them, China is critically important. You have a number of analysts saying buy the dip on Apple right now because they expect in that key holiday quarter, fiscal first quarter, that the China data might show up being good. Tesla also needs to address the China issue. Increased competition, subsidies are going away in China just as they have done here in the United States. But those themes are ongoing. There's nothing that new to start the year, I'm afraid.
But there is a lot going on in terms of big tech this week. Ed, we'll all be watching your program. Bloomberg Tech's Ed Ludlow's program kicks off at 11 a.m. with Caroline Hyde. Now, Washington and Wall Street are preparing for another government shutdown as Democrats demand that funding for Homeland Security and ICE is taken out of the equation. Meanwhile, more than 60 CEOs of companies, including Target and Best Buy, are calling for a de-escalation of tensions. Bloomberg Washington correspondent Tyler Kendall joins us. And Tyler, I think it'd be interesting to hear, after we've all digested the video in the killing of Alex Preddy, if White House officials, if Department of Homeland Security is starting to back off of their assertions that he was holding a gun at all or that he was a domestic terrorist. Have they taken any of that back, as we all see that it's no longer the case?
Well, Matt, rather than taking it back, we are seeing White House officials saying that they're going to look into this. President Trump, for example, telling the Wall Street Journal yesterday that they are, quote, reviewing everything when it comes to this case, which appears to be perhaps a more nuanced and softened position than what we originally heard when it came to the White House's defense of what had happened in Minnesota. And it does come as we are starting to hear from some advisors and those close to the White House that this could be a political liability, considering if you look at just the fallout happening on Capitol Hill right now. Now, we're starting to see some Republican members call full-throatedly for full investigations into this. They may not be going as far as Democrats, and we can talk about this, potentially threatening a partial government shutdown over it, but it is extending beyond those normal Republicans that we would expect to perhaps push back against some of the Trump administration's policies, like Senator Tom Tillis or Senator Lisa Murkowski. But we're also hearing from some staunch allies of this White House that something needs to be done, whether or not that is a full investigation or something else, including Bill Cassidy, a Republican from Louisiana, or James Comer, for example, coming out and saying that they should have a full investigation on Capitol Hill into this. So it is definitely escalating and ramping up that pressure on the White House to respond.
Tyler, some things are more important than asset price moves, and I think it's fair to say a tragic killing like this absolutely is one. But if you are going to look at any market impact, it has to be on the likelihood of a shutdown. Tyler, is there any way that this ends in not a government shutdown by the end of the week?
Well, if it does end in a government shutdown, we should also say it will be a partial government shutdown, considering that Congress has already passed 6 out of the 12 required appropriation bills for the fiscal year. But Dani, I have to say, a senior aide to Democratic leadership tells me that Senate Minority Leader Chuck Schumer feels confident that he does have the votes to withhold Democratic support from the spending package that is in front of that chamber right now, risking this potential shutdown. Because if we look at the math here, Republicans need 7 Democrats to get on board. Not to get too much into the numbers, they're considering a 6-bill package. One of those packages would fund DHS down the road, and that is what they are threatening to pull out. We'll see if it ends up happening.
Tyler, thank you so much for your reporting this morning. That's Bloomberg's Tyler Kendall. Let's now turn to commodities and currencies, the U.S. dollar dropping on speculation that America may help Japan support the yen. Gold, meanwhile, surging $5,000 past that level for the first time ever. Joining us now is Bloomberg intelligence strategist Damian Sassower. Damian, I mean, even just the news this weekend would have been enough for us to pause and say, wow, a lot has happened so far in 2026, but that just adds on top of everything we've heard. Is all of the angst, be it tariffs, be it concerns around domestic issues in the U.S., be it the Japanese yen versus the dollar, is the biggest way this is manifesting in just bidding up gold a massive amount?
Well, absolutely. The dollar debasement trade is back in focus for sure. But I think, this goes back to last week, Danny. You remember we had our big emerging market investment forum. And the big question there is what constitutes an emerging market, right? Is it South Korea? Is it India? Is it Indonesia? I mean, how do these countries fit into broader emerging market indices? How do institutional investors look to take advantage? And what we're seeing in the beginning of this year, very, very interesting, is it's Asia FX, not just EM Asia. It's Japan. It's the Hong Kong dollar, the Taiwan dollar. They're all kind of rolling over here. And the one currency that you just can't ignore in this environment is dollar yuan. The China yuan has now broken below the psychological 7 handle. And that gives, credence for it to be re-included in trend indices and momentum indices. And so, again, it's the Asian bloc and it's back in focus and it's very divergent.
Of course, the speculation, at least behind some of the market moves we're watching today, is that you could see U.S.-Japanese intervention, coordinated work. How likely is that, Damien? How often does that sort of thing happen? And where do you think these rumors start?
Well, I think many of us who have been looking at the market for a long, long time view dollar and yen as really one currency block. So Matt, I mean, I think, if you talk to Edgar Denny and a lot of those guys who kind of do that sort of plumbing within the financial markets, that type of work, I can't disagree with it. And so, this is really nothing new. I think really, though, a 30 BIP round trip move in 30-year JGBs. I mean, just take a minute to digest that. This is 30-year JGBs. They don't move. So, for markets, and believe me, and for investors, of which, Japan, the government of Japan is the largest of them, this definitely, leads people to start, the commotion about crowding out, right? It's all about fiscal pressures as we enter into the first half of this year. Germany, Japan, the US, all of the above. China's going to need to stimulate fiscally. And again, as this treasury issuance ramps up, is it going to crowd out other asset classes, other issuers? I mean, the verdict right now is no. U.S. high yield, global high yield for that matter, is the best performing asset class this year, albeit, only through the first month. But EM credit, EM local, these are other high beta asset classes that are benefiting from this sort of environment.
All right, Damien, thanks very much. Damien Sassower of Bloomberg Intelligence joining us on the currency and commodity moves. Check on what's going on in futures right now. We're looking at, in terms of stock futures, S&P futures up about 0.1%, NASDAQ futures down almost 0.1%. So not a lot of movement on the index level.
Let's see if anything's moving underneath the surface. A unit of China's Zijin Gold is buying Allied Gold. That's a Canadian firm operating in Africa for $4 billion. Those shares are skyrocketing. By the way, all the gold miners hitting new records today with the price of gold above $5,000.
Understandably so. Yeah. IonQ agreed to buy Skywater in a cash and stock deal that values the chip maker at about $1.8 billion.
And meanwhile, Revolution Medicines, that's plunging. The Wall Street Journal reporting that Merck has ended talks to acquire the biotech firm, down almost 21%.
All right, coming up, a powerful winter storm we've all now lived through absolutely buries New York City. Snarling commutes, canceling flights, pushing schools and workers online. We'll have the latest next. This is Bloomberg Open Interest. Let's get now to high interest. Look at what's making headlines around the world. President Trump says U.S. border czar Tom Homan will travel to Minnesota tonight after federal agents shot and killed a protester during an immigration enforcement operation. Republicans are split over the fatal shooting that has fueled criticism of the Trump administration's immigration crackdown and sparked ongoing protests. Democrats are now threatening a government shutdown over Homeland Security funding. And Canada says it won't back down from diversifying trade beyond the U.S. despite new tariff threats from President Trump. Canada's foreign minister says reducing reliance on the U.S. is essential to protect Canada's economy as tensions rise over limited EV trade with China. Canada is expanding ties with India and Asia while insisting the U.S. relationship remains strong. And a massive winter storm slammed New York City, dumping heavy snow and disrupting the morning commute. MTA CEO Janno Lieber joined Bloomberg Radio to talk about how the nation's biggest transit system is working to get back on track.
Our concern now is we're operating a full Monday morning commute, which is amazing. But obviously with a risk of thaw and icing, that presents new problems. So we're moving on in how we manage the impacts of the storm.
Meanwhile, city and state officials are urging remote work in New York City public schools move to remote learning. It's remote. Wait, the kids don't get a snow day?
Only if you are a private school student. Apparently, like Trinity and those very fancy private schools in New York were like, congrats, you get a snow day.
That's awful.
So you have to pay if you want a snow day, apparently.
That's a bummer.
Super bummer. The kids should be able to enjoy it. Let's stick with the snow and the storm. We're joined now by Bloomberg senior reporter Miles Miller, who's knee-deep in the snow itself in Central Park. Miles, good to see you this morning. Thank you for braving the cold. Just how disruptive has the storm been?
Well, Dani, nearly a foot of snow fell here in Central Park. 11.4 inches blanketed the city in its heaviest snowstorm in years. Now, what we know is that this Monday morning commute has been messy for those who have been willing to brave it. And of course, commuter rail lines are operating with modified schedules. The Long Island Railroad, which gets many people into Wall Street, is running on a weekend schedule, and Metro North is on an enhanced Saturday schedule with reduced service on the Hudson, Harlem, and New Haven lines. New York City's subway and bus system is, of course, largely running on schedule, though multiple lines had delays this morning. But the critical piece of that transit infrastructure is, of course, New Jersey Transit, which halted all bus service and train service yesterday. It is resuming in phases, but the bus service is beginning to run at 10 this morning. No word on when full service will return. But, when we talk about this, this was really the first test for Mayor Zohran Mamdani, who had urged anyone who could work remotely to stay home. Yesterday's snowstorm meant that plows were all throughout the city, hitting those primary, secondary, and tertiary roads. And for a good measure, it seems like the city did quite a good job. But it is cold here in Central Park, and people are taking in the sights. It is gorgeous. It is picturesque. And, of course, I brought my tea with me because I cannot stand out here and talk to you about how cold it is without keeping something warm near me. And this tea is basically iced tea now.
How much, by the way, cheers to that, Miles Miller. How much did Mamdani have to be prepared for this? Because of the experience that we all went through under de Blasio, where as soon as he came into office, the snow hit and nothing was cleaned off the streets. The trash piled up and nobody came to pick it up. And Mamdani, I'm sure, is sensitive to that issue. Has he doubled up on, snow plows, salt trucks, and trash pickup to avoid that issue?
Yeah, the mayor spent his time basically hitched to the sanitation department, went to a sanitation department garage early Saturday morning, and then was there with them for the start of the shift at 6 o'clock, and really paid good attention to where those snowplows were heading. There has been advanced technology knowing where these snowplows are at any given time. You could go to Plow NYC and see when a snowplow had gotten to your street. And if you had an issue with that, you could call 311 and they'd figure out a way to get you a plow as soon as possible. I live on a major road in Brooklyn. I had both the big plow and those tinier plows going through my street so much so good that my all-wheel drive had to be put in overdrive in order to get out of that spot that I had gotten plowed into. And I'll tell you this, the mayor was very keen on operations for the first time, having NYPD vehicles giving escorts to ambulances to make sure that anybody who needed help got it. And for most parts of the city, you can say it was quite a good experience for people who live in the city.
Miles, thank you very much for that reporting. Stay safe, stay warm. Bloomberg's Miles Miller. Coming up on the show, PNC's Amanda Agati shares her thoughts on the resurgence of the debasement trade debate. That's coming up next. Stay with us on Bloomberg Open Interest. The dollar is weakening. Gold pushes above the $5,000 mark. The greenback itself is sent for a 4-month low on speculation that the U.S. and Japan may coordinate intervention to support the yen. Meanwhile, gold smashing records as investors flee from sovereign bonds and currencies. Let's bring in PNC Chief Investment Officer Amanda Agati. Amanda, it's clear that there is some real movement in these markets as the equity market refuses to budge. And everyone says it's earnings that's most important for that. But when do these concerns on the periphery, if you have gold surging above that $5,000, start to matter for overall risk assets?
Well, it's a great question. Thanks so much for having me. A hard one to answer with a lot of precision. I mean, I think this all comes back to what I've been describing for a while now as the purple haze of policy uncertainty, both here in the US and abroad. I mean, you said it, certainly. We have currencies moving in a lot of different directions, global central banks in different places, interest rate differentials, questions around inflation. And so what is an investor to do in this environment? They just keep piling into precious metals as a hedge. We tend not to be very long only as it relates to gaining exposure to precious metals. It's not to say we don't want them in portfolios, but we tend to want more nimble exposures. And I think with gold, surpassing 5,000, you got to start thinking about, are there other avenues to, play this trade or play this hedge, or should we be thinking about a reset? So I'd be focused on a CTA kind of strategy, much more nimble, long and short, in and out of different precious metals. It's not just a gold story, even though gold is the headline story.
All right, Amanda, we're going to keep you with us. PNC's Amanda Agati sticking with us through the closing bell. In terms of futures right now, it's looking as unchanged as the close did on Friday. S&P futures right now up 0.1%. On Friday, we barely budged in that respect as well. NASDAQ futures really unchanged, or down 0.02%. And the small caps not moving much at all either. I think it's safe to say there may not be a ton of people at the trading desk, too.
I think that's right. Trains coming from New Jersey are, like 80% reduced. You also have Boston with a weather effect warning, too. So it's basically everywhere. No one's coming in. But if you are trading, we have the opening bell coming up for you next. So stay with us for that.
Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller. We are looking at very little change in terms of futures, although they're creeping higher and higher on S&P futures, now up about 0.2%. We closed unchanged at around 69.15 on the S&P Friday evening. NASDAQ futures very little changed, as our Russell 2000 futures. Ringing the opening bell down at the New York Stock Exchange's Squawk on the Street. What? These guys get to ring the opening bell like all the time. It's almost as if they have a set.
It was Squawk Box
on the New York Stock Exchange. Look at Jim Cramer there, and Sarah Eisen, Bloomberg alum. Wait, how many of these people used to work at Bloomberg? Okay, let's take a look at what's going on the NASDAQ. Atlas Critical Minerals. Smart to put critical minerals in the name of, or rare earths in the name of your company when you're doing an IPO on the NASDAQ. That way investors know what they're getting.
Yeah, I wonder how soon until they get an investment from a certain administration. Anyway, leave it at that. Some of the stocks we're watching this morning. Nvidia has invested another $2 billion in CoreWeave. It's already invested in it before. This is all to help speed up an effort to add more than 5 gigawatts of AI computing capacity by 2030. CoreWeave surges by 13%. Nvidia is little changed. That's only 2% of what CoreWeave plans to spend to get their infrastructure online. So Jensen Huang arguing it's not circular financing because they're not dependent on us.
Yeah, please buy our stuff. Here, we'll give you money to buy our stuff. All right, USA Rare Earths signed a non-binding agreement with the Commerce Department to receive $1.6 billion in funding from the Biden-era CHIPS Act. So USA Rare Earths, I guess, is an American rare earths company.
I would hope so. It would be very disappointing if not.
Let's bring back in PNC Chief Investment Officer Amanda Agati. Amanda, do you invest along any of this like pro-sec strategy? Do you say, okay, the Trump White House is going to want to bring manufacturing back. They're going to want to strengthen our chip or establish a chip manufacturing business in the U.S. They're going to want to pull rare earths out of the ground and refine them. Let's go invest in all of that stuff.
It's a great question, and I would say we haven't done a lot in that regard yet. I think it's I'll reiterate the purple haze of policy uncertainty around what the administration is going to do or not do, and along the timeline does make it hard, I think, for investors to time this well. I think there's clearly a push. There's no question that dollars are going to be aimed in this direction, but I think at the moment it's hard to get really precise. And so with broad brushstrokes, yes, we do think about thematic and tactical trades in some of these areas, but I think we need to know a little bit more on how 26 is going to play out before we have a lot of conviction to lean hard in that direction. I personally think you just want broad-based exposure to U.S. equities in this environment. It's the best game in town. So I'm willing to hang on for the ride and the rally to come this year.
Amanda, how are you thinking about conviction around big cap tech? You have 4 of the Mag 7 reporting this week. The cohort's down about 0.5% so far this year. Are these dips where you want to buy?
Well, it hasn't been much of a dip.
True.
I mean, I'd like to see a little bit more of a correction to really back up the truck here, but it's a little blip on the radar here, I think, for these guys. There's no question they have to deliver and prove that they are worth these lofty valuations here. I think the fundamental chops are there, so we'll see how the reports play out. I don't think it's necessarily about this moment in time, though. It's really what that return on investment for all that infrastructure build is going to look like. And we're just not going to know that in 26. So if your time horizon is more than just a quarter or two, I still think, it's hard to bet against these guys. It's a really strong secular tailwind story, and we definitely have exposure and want to continue to be a part of it.
So last year, we were talking a lot about the purple haze of policy. Is it any less hazy this year, Amanda?
No. It's like a snowmageddon blizzard of policy uncertainty here in 2026. I feel a little bit of a broken record in saying that, but I think it's a bigger story for this year than it was last year. I mean, you think about what's going on with fiscal policy, all of the actions that were put into effect last year as a function of the tax bill. All that comes home to roost this year. Does it make a difference or not? What's going on with Fed policy counts as the purple haze. The midterms this year, geopolitical tensions. I mean, right out of the gate in the new year, we had some fairly unexpected and big geopolitical action. So I think it's still very much in the forefront of investors' minds this year, with the caveat that we're seeing a lot of momentum from the fundamentals as we enter 26, and that may be enough of an offset to keep the market rally engaged.
It's that old adage of there are decades where nothing happens and there are weeks where decades happen, and that's certainly what's been 2026 so far. And Amanda, maybe this is what you were hinting at with some of the fundamentals, but why with all that is it a VIX still at 16 and a move index of bond volatility that is at its lowest in at least 4 years?
Yeah, you're totally spot on with that. I'm surprised as well, even with the noise coming out of Japan and the snap elections and the currency intervention that potentially is happening there. Credit spreads are really tight. Volatility is very calm. It's unusually so, I would say, given the purple haze that continues to swirl. But maybe it is a function of the both economic and earnings growth story that's sort of building momentum here. We're finishing out 2025 with Q4 earnings that are really much better, I think, than expected. It's still early, of course, but revisions were positive over the entire course of Q4. And so I do think that there is fundamental strength. If you can just dial back some of the noise and look at the path for GDP this year, look at the path for earnings growth this year, it could still be a strong year. I just don't think it's going to be a straight line. I think it's going to get choppy, and you just have to assume that vol is going to pick up a little bit. Maybe not a spike, but it's definitely going to pick up from here.
What about the interest rate situation? I mean, are you concerned at all that that starts to rise, that rates start to rise, that inflation is sticky at 3% or more, that these things could slow down earnings in Qs 2, 3, and 4?
Yeah, it's something that we're always paying close attention to. I don't feel particularly concerned about the inflationary backdrop. I think even if inflation kind of stays about where it is, maybe ticks up a little bit, valuation multiples and nominal earnings growth are correlated to sort of that tranche of inflation. So I don't think that in particular bothers the market. Definitely focused on what's happening with the 10-year, the steepening in the yield curve. The bond market's not giving policymakers a lot of room. And so even though, the Fed may lower rates again later in the year, again, there's a lot of haze of uncertainty around that. The 10 to 30-year portion of the curve is sticky and higher. And so I do think that is going to pose some challenge for multi-asset investors as the year plays out.
Some really interesting moves to start the year. Amanda, thank you so much for joining us. PNC's Amanda Agati. About 7 minutes into your trading day, let's take a look at where equity markets stand because we are on track for a rally after 2 consecutive weeks of declines. We're up by about 1/3%. Breadth is fine, about 360 stocks higher. Apple is up by about 3.2%. That would be, or 3.2 points, I guess. That would be good for them, considering they've fallen for 8 consecutive weeks. It hasn't fallen for 9 since 1993. A lot of the Mag 7 having an okay day. Nvidia up barely 1%. Broadcom, Meta, Oracle. Those are all moving higher after Nvidia makes a new investment in CoreWeave. To the downside, it is Tesla this morning. Tesla will also be reporting earnings on Wednesday. Whether they show up or not will be a different question. Micron getting hit hard after Nvidia made another agreement with Samsung Electronic, Micron's rival, to supply memory chips. So that's a disappointment for them. Microsoft, they'll also be reporting earnings this week. Those shares are down. Let's take a look at some of the sectors. All of them except one, I believe, are up. The GRR screen will confirm that for me, and it does. Everything is higher, led by utilities, materials, financials. The only sector to move lower this morning is consumer discretionary. That is down by 0.25%, Matt.
All right, coming up, we're going to discuss Nvidia's further ties and investment in CoreWeave and Mag 7 earnings with Bloomberg Intelligence analyst Mandeep Singh, who has made it back safely from Davos. Stay with us for that. This is Bloomberg Open Interest.
Let's get you some top calls. What the sell side is upgrading and downgrading. First up, Phillips Securities. They upgrade Netflix, saying the company's leadership in video on demand is translating into durable pricing power and a stronger long-term outlook. They say that the streaming giant scale gives it a clear advantage over its peers, but shares down about 1/3% this morning. Next up, Evercore. They raised Cisco to a buy, saying that the company has clear growth tailwinds that can drive revenue and earnings growth over multiple years. They point to sustained strength in networking through 2026 and rising AI-related demand. Shares up 2.75%. Finally, Rothschilds and Redburn is upgrading Meta to a buy. The firm also lifting its price target to $900, signaling increased confidence in Meta's long-term outlook. Shares are up 1%, just thereabouts, and I believe they also have earnings this week. Matt.
66545.
Yes.
I guess that rounds up to 666. Nvidia announced a $2 billion investment in CoreWeave as the AI stalwarts deepen ties. Let's get reaction from Bloomberg Intelligence Global Head of Tech Research, Mandeep Singh. And Mandeep, I'm sure this makes good sense from the standpoint of Nvidia as an operating business, but it does seem like they're giving their customers money to buy more stuff from them. Does that not seem like what is happening?
Well, I do think, balance sheets are getting stretched for all of these companies that are investing in AI infrastructure. Unless you are an Alphabet or a Microsoft, I think they still have room to, stretch in terms of their CapEx versus where their, operating cash flow is. But for everyone else, the more you raise CapEx and the further out your revenue is, which we saw with Oracle last year, it's going to, create some anxiety among investors. And so an Nvidia coming in and saying, okay, I'm willing to put, $2 billion in the company does calm down some nerves in terms of, CoreWeave potentially raising their CapEx for 2026. And so from that perspective, I think it makes sense for an Nvidia to do that. Look, the other way they could have done is to bring down their gross margins and really give these companies a subsidy in terms of, what they're charging for the latest versions of their chip. I think Nvidia prefers this approach where they make an investment in OpenAI or a CoreWeave, and that to me seems to be their playbook in terms of these minority investments.
Jensen Huang, his defense in response to accusations of circular financing was to say this is just a fraction of what CoreWeave and these other companies are going to have to spend in order for their total infrastructure ambitions to come true. This is about 2% of what CoreWeave plans to spend on getting its infrastructure online. Mandeep, is that a fair defense that if Nvidia were to have to pull back for some reason, for example, CoreWeave would have other funding and spending it would need to do beyond this $2 billion?
Yeah, more than that. I mean, look, sovereign AI was a big deal at Davos, and it's very clear to me that everyone is thinking in terms of gigawatt capacity. And the rough math still is in the US, it takes anywhere from $40 to $50 billion to add 1 gigawatt of new capacity. So from that perspective, $2 billion isn't a big sum. And, yes, it helps you kind of procure some of the chips that you would have to pay full price. So they're sort of giving you a subsidy on that. But you still need the power, you still need the land and other infrastructure. And so from that perspective, to keep building this out, you need funding from different sources. I'm sure CoreWeave will have to raise some debt as well, as they think about expanding their gigawatt capacity.
I wonder, you were in Davos, and you were, I guess, had the opportunity to talk to a lot of these big CEOs. And what we heard publicly was nobody thinks that there's a bubble. No one has any bubble fears. Everyone is trying to convince all of us that there's no way this is a bubble. But the concern is, right, that we're investing so much and we're not going to get the return on that investment soon enough. It took so long for the internet investment to pay off. Did anyone there share those concerns at all?
I mean, look, so far, all of the financing for the build out of this AI infrastructure has come predominantly from these hyperscalers, right? So now sovereign AI, which was a big theme at Davos, essentially means the governments are getting on board, like the G42 unit and the UAE, as well as, Saudi Arabia, all the countries, India, they're talking about building their own sovereign AI. They're talking about adding more power for the infrastructure. So from that perspective, it is expanding in terms of who is involved in around build out of this infrastructure beyond the hyperscalers. And that's a positive sign. Will there be an overinvestment where you can't really show the ROI? Potentially. And so from that perspective, we still have to wait to see, who can show consistent ROI and who will have this further out where it will cause some anxiety. And so those conversations did happen along with the job displacement. I think there is a lot of anxiousness around what this means for the jobs and what kind of new jobs will be created where, the governments and the heads of state really want to figure that part out. And those were a lot of the conversations we had at Davos.
And we'll see whether any of those lingering questions get answered by this week, Mandeep, a week where we have Microsoft, Meta, Tesla reporting on Wednesday, Apple reports on Thursday. I personally am most interested in Apple, considering the shares have gotten so beaten up, down for 8 consecutive weeks. It hasn't made it 9 since 1993. Mandeep, how much is at stake when Apple reports its results on Thursday?
There is. And look, I mean, we talk about the partnership they have with Google. So Google clearly seems to be in that sweet spot where they have everything going right for them. But for someone like Apple, still, a lot hinges on what they will do with Siri. How will that revamped Siri look like? Will it really drive that upgrade cycle? So a lot of uncertainty. And in this market, if you don't own your large language model and you don't own the infrastructure, I think you still have to figure out what your AI path really is. And I would put Apple in that bucket.
Hey, Mandeep, thank you so much. I know we're going to talk a lot this week as those earnings come in. Mandeep Singh of Bloomberg Intelligence. Coming up on this show, an increasingly unstable global geopolitical order has turbocharged defense stocks. Will those earnings, though, bring valuations back to reality? That's coming up next. You're watching Bloomberg TV.
This is Bloomberg Open Interest. I'm Matt Miller. Quick check on what's going on with stocks here. You can see S&P 500 gains of almost 0.5%. So 69.46 gets us about 39 points away from a record high. The NASDAQ 100 up 0.3% at 25,680. Small caps actually gaining the most of the four major indexes as the Dow gets closer and closer to 50,000. Take a look at Nvidia. It's actually off about 1/3%. That doesn't bode well for this rally. CoreWeave is gaining 14% after Nvidia invests $2 billion in its customer. You've got USA Rare Earths up, a company you'd never heard of before, but now you know exactly what they do, and they are getting money from the government in terms of $1.6 billion, I believe, most of that coming from the CHIPS Act. Barrick Mining, gold powers through $5,000. Barrick is up 4% right now at 53.10. And then investors have been bullish on defense stocks, but these two are doing poorly today. So you can see Northrop Grumman actually down only 0.7%, and L3 Harris doing a whole lot of nothing today, but still, Dani, with a red arrow.
Yeah, over the past 1 year, Northrop Grumman is up 34%. The entirety of the sector in defense stocks, the ETF for it, is up 50%. It's high valuations for the defense stocks, even if they're slightly weaker today. It is going to get an earnings test in the coming weeks. Bloomberg's Matthew Griffin has been reporting on the sector's growth as geopolitical tensions climb. Matt, it is some real outperformance we've seen from the defense stocks. Just how fragile is that rally heading into the earnings season?
Well, Dani, I would say there are a few reasons to be bullish and reasons to be cautious. So if maybe we start with the caution, the sector as a whole really rallied last year. The S&P 1500 group of defense stocks was up more than 40%. You had, like you were talking about, big rallies in some of the names like Northrop, even bigger gains in L3 Harris, RTX. And that has taken the valuations higher as a group. You have bets on, for example, the U.S. growing defense spending to $1.5 trillion in 2027. Of course, that has not come close to being signed into law yet, so there's some risk that things won't materialize. That being said, there are pockets of potential opportunity here. Lockheed Martin and General Dynamics still trade at a discount to the broader market on a forward price to earnings basis. So investors are not necessarily bracing for steep downside here.
You know, Northrop Grumman's supposed to pay a $2.30 dividend. General Dynamics, a $1.50 dividend. All of these companies typically pay big dividends or give money back to shareholders through buybacks. Is that off the table for 2026?
We just don't know yet. The Trump administration did issue its executive order that was trying to curb buybacks and dividends at what Trump has called underperforming military contractors. That being said, it remains to be seen. Will there be legal challenges? What companies will be included? Just in general, whether and how this will be applied. Now, RBC does point out that this sector is in the political crosshairs. So even if that's not all sorted, there is a general level of volatility investors can expect going forward. At the same time, defense spending rising around the world, we could get some color on specific programs when companies report this week. For example, Lockheed's deal with the Department of Defense to boost Patriot missile output, and that could help move the needle in the other directions. So again, I hate to say I don't know, but these are a few of the things that investors are watching as they try to sort out what this all means.
All right, Matthew, we'll continue to talk to you about this then. Bloomberg's Matthew Griffin covering the defense stocks for us. Coming up in the next hour, Lauren Goodwin joins us on the pressure on the U.S. dollar as well as earnings expectations. Plus, we'll talk energy demand with the CEO of Baker Hughes and TrueCar's Scott Painter, a pioneer in online car sales, will tell us what AI can do for the sector. This is Bloomberg Open Interest. We are 30 minutes into this trading day. Welcome to Bloomberg Open Interest. I'm Matt Miller.
I'm Dani Berger. We're moving higher, but barely, less than 0.5% after 2 consecutive weeks of declines on the S&P.
Coming up, Nvidia invests another $2 billion in its customer CoreWeave ahead of results from Meta, Apple, Microsoft, and Tesla, all coming this week.
Shutdown risk rises. Senate Democrats threaten to block a spending package as fallout grows over a second death in Minnesota.
And under pressure, the dollar drops on talk of a coordinated U.S.-Japan intervention while gold storms past 5,000.
Thanks for
you know,
that,
I'm pretty sure that our producers write that into scripts so that I'll say it that way.
They know exactly what they're doing.
Because I can't say it any other way.
Yes, they know exactly what they're doing. Earlier today, JP Morgan's Bob Michael weighed in on the recent FX moves and the Sell America trade. He spoke on Bloomberg Surveillance.
There's discomfort with U.S. policy. There's some dissatisfaction. But in the end, our client base is looking at the breadth and depth of the U.S. markets and deciding they want to be there. The kind of movements we've seen have been market participants pushing FX around. That can only go so far.
Joining us now is Lauren Goodwin, economist and chief market strategist at New York Life Investments. And Lauren, a lot has been made about a potential U.S.-Japan intervention to cool down the dollar, which it seems like this administration wants anyway, and it's really helped gold rocket higher. How do you look at it?
Well, let's first discuss why it's so important to maintain stability in the yen for the U.S. Really has to do with the fact that when you have a currency that's so big, so important, experiencing a lot of volatility, you can see a lot of leveraged trades unwind quickly, and that reduces liquidity in the currency markets globally. That's really what central bankers are trying to get ahead of in this market. I think it also brings up a really interesting dynamic, which is that the dollar, which we typically talk about in trade-weighted terms, is really a single currency that we benchmark against lots of different currencies. And so the relative weakness that we might be seeing in the dollar is specifically about trying to bring the yen to bid and trying to stabilize those currency markets. I see this as perhaps not the specific dynamic, but currency volatility generally, and frankly, a range-bound trend in the dollar as being a big part of the global economic story this year, as tensions between debt sustainability, the role that the U.S. plays in global markets, et cetera, play out in this global economy.
Lauren, is there not an element, though, that this just represents a more activist treasury, be it in Asia FX or trying to do things that might bring down bond markets? Is that not one level of interpretation we could have of what happened on Friday and over the weekend?
I'd hesitate to go so far, not because it's not a reasonable argument, I think that it is, but that the Federal Reserve and frankly central banks globally have played a role in stabilizing big moves like this in bond yields as well as currencies for a very long time. We saw intervention with respect to Argentina just a few months ago. And really, when it comes to major currencies like the yen, we do see this type of intervention when there are big moves and crises. And I think, again, the important element here for the Fed and for the Treasury is related to stability in a market that could otherwise cause a big contraction in liquidity that affects not just the yen or Japanese bonds, but global assets, including risk assets like equities.
Is it really stability that they want, you think, Lauren? Because if I look at the BBDXY, which is the Bloomberg dollar index, right, it tracks the dollar against a basket of 10 different currencies. We can see that it's down to levels we haven't seen really since 2022. And it comes at the same time as we get massive stimulus in terms of tax cuts in the big, beautiful bill, and an administration that wants to send stimmy checks back out to consumers as well to help pay for the cost of tariffs. So it looks like they're trying to supercharge this economy. And I would think the Fed is concerned about that with inflation so far away from its target.
Yeah, I think actually that last point is the most important point with respect to this question of really how is the U.S. administration ranking its priorities? And there are some, as is frankly always the case in a complex and big global economy, there are some conflicts in how those priorities get at each other. The president has said very clearly that he'd like to see a lower dollar. There are some benefits there for the profitability of U.S. companies, for example, but costs with respect to inflation. our best guess, and I'll be honest, when it comes to 2026, the direction or a specific price on the dollar is one of our lowest conviction views. But we believe that the combination of the stronger growth that policies in the U.S. are looking to achieve, as well as the instability or the uncertainty with respect to the geopolitical backdrop and the hedging that investors have to take on the dollar as a priority, those two things are going to be battling against each other quite a bit this year. And so we're expecting a range-bound and volatile dollar, which plays just a small role in the broader diversification we expect investors are going to have to take this year. That means staying invested in U.S. assets, which are putting forward that growth, but diversifying not only geographically, but also sector and currency-wise into other markets, even if you're not expecting outright outperformance. That ballast in a portfolio we see is really important.
Lauren, what's your take on inflation? Because we're going to get reportedly like 15 to 20% higher tax refunds this year. Prices have risen. The Kiel Institute showed that the tariffs have been passed through to U.S. corporations and then to consumers, right? So those prices are up. And the president wants to take the revenue from those tariffs and give them back to consumers who will then use them to go buy those inflated price products. Like, how could inflation not continue to be sticky at 3%?
Look, the core inflation right now in the U.S. is at 2.7%. Our base case expectation is that it moves back up through and above 3%. Now, that's not anywhere near the 9.5% that we saw a couple of years ago.
But it's on top of that.
But it does. It makes it very difficult to see a Fed that's aggressively cutting. Now, I think actually the most important investment point here with respect to stickier inflation is that the benign U.S. bond market that we've seen, despite some of the global challenges, despite some of the policy shifts here in the U.S., has been specifically because inflation has been contained. And so I think when we do start to see inflation tick higher, even if it's only a little bit higher, the questions around a benign U.S. bond market start to become much more in question for us. So a meaningful uptick in inflation starts to move outside of our base case and into, let's call it, risk zone. But it's a risk that I'm thinking about very, very critically. And we've seen over the past couple of days that when the U.S. 10-year gets closer to 425, that already impacts the breadth of performance in the equity market. And so though we wouldn't expect meaningful disruption until inflation expectations in the 10-year move up closer to 4.5%, we're not so far away from that. And so I think it's one of the most meaningful risks to positioning this year.
Yeah, Mike Wilson has been writing about that over the weekend, saying that the correlation between rates and equities is on the rise. Lauren, I've also heard that argument as it relates to Fed independence, that at the moment, markets don't care because inflation has been benign. So it's setting the Fed on a course that if they were to cut, it wouldn't be devastating. If that were to change, if inflation did start to rise, and we had a Fed pick at the top who is someone who, in Trump's words, is someone loyal to him, does it become more of a problem?
I think this is such an important point. And frankly, investors have been lucky over the last 6 or 9 months as the Fed has started to move back into its rate cutting cycle and signal that those rate cuts were coming, that policy was above the neutral rate, that there was broad agreement that Fed policy in today's world is restrictive. As we've moved the policy rate lower than 4%, there's more of a debate around how much farther the Fed needs to go. That's when these questions around inflation become so much more pertinent. There's been just enough evidence to really not have a lot of debate about how far the Fed is cutting today. When it comes to the Fed cutting tomorrow, that perception of, is the Fed cutting because the economy really needs it, or are they cutting for different reasons? It's going to become so much more of a challenge. And so that monthly inflation figure, I think, becomes a much bigger market signal, market trigger than it frankly has been over the last few months.
Lauren, thank you so much for joining us this morning. I hope you are staying safe and warm. Lauren Goodwin of New York Life Investments. A check on your markets this morning. We do have stocks moving higher about 40 minutes into your trade. But here are some of the single name moves that we have this morning, Matt, including Nvidia and CoreWeave.
All right, so this is an interesting story. Obviously, CoreWeave, a big move as well, 12, 13%. Nvidia investing another $2 billion in CoreWeave to help speed up efforts to add more than 5 gigawatts of AI computing capacity by 2030. And read it another way, Nvidia investing $2 billion in CoreWeave to buy more stuff from Nvidia.
But Jensen Huang says it's super okay because
they need so much more money.
Because they need even more money than $2 billion. Mining stocks, those are also on the move this morning. Newmont and Barrick trading at record highs this morning after gold hit its own record high, surging past $5,000 an ounce for the first time.
Baker Hughes delivering better than expected earnings and raising its 3-year data center order target to $3 billion. That's a Baker Hughes data center order target.
Yeah, correct. They're going from just oil services to technology as well. And stay tuned for an interview. We're going to be speaking with Lorenzo Simonelli, the Baker Hughes CEO, later this hour. But first, coming up, we'll be speaking with Itay Michaeli of TD Cowen as auto earnings pick up, with Tesla reporting results on Wednesday. You're watching Bloomberg Open Interest.
Let's get now to high interest. Look at what's making headlines around the world. President Trump says U.S. border czar Tom Homan will travel to Minnesota tonight after federal agents shot and killed another protester, American protester, during an immigration enforcement operation. Republicans are split over the fatal shooting that has fueled criticism of the Trump administration's crackdown and sparked ongoing protests. Democrats are now threatening government shutdown over Homeland Security and ICE funding. CVC Capital Partners has agreed to buy U.S. credit manager Marathon Asset Management in a cash and equity deal valued at up to $1.2 billion. The acquisition significantly expands CVC's footprint in the U.S. credit market, adding Marathon's asset-based real estate and opportunistic credit strategies. The deal will lift CVC's credit assets under management by over a third. And the European Union is investigating Elon Musk's social media platform X over claims its Grok AI generated sexual deepfakes that may qualify as child abuse material. Regulators say the company may have failed to reduce risks under the Digital Services Act. X says it has zero tolerance for exploitation. Dani?
Sticking with Elon Musk, Tesla preparing to report fourth quarter earnings on Wednesday with self-driving, cybercab production, and robotics rollouts in focus. In Davos last week, Musk gave a timeline for when the company will sell its Optimus robots to the public.
By the end of next year, I think we'd be selling humanoid robots to the public. That's when we are confident that it's very high reliability, very high safety, and the range of functionality is also very high. You can basically ask it to do anything you'd like.
Joining us now is Itay Michaeli, senior analyst at TD Cowen. He has a buy rating on Tesla with a $509 price target. Itay, thanks for joining us this morning. Let's start with those comments from Davos, because we know Elon Musk can tend to be a little squishy when it comes to timelines. A robot by the end of next year. He also talked about that there will eventually be more robots than people. How much of this, if at all, do you factor in to your numbers on Tesla?
Absolutely. Thank you for having me. It is a part of our upside case for the company over the next couple of years. This year, the company will launch the third version of Optimus, and then kind of growing from there. Although our near term, we do still think that the Robotaxi and FSD will likely be the key milestones to watch in the near term as we get into Wednesday's earnings. You mentioned the Cybercab launch in April, as well as additional Robotaxi urban expansions, and of course, FSD features as well, including prospects for eyes-off features to launch this year is what we'll be watching for most kind of going into Wednesday. We do think 2026 will be a pivotal year for the company, and these milestones will likely be more important on Wednesday than the actual numbers themselves. But there's a lot of catalysts out there that we think the company could hit in 2026, and we'll look for updates there on Wednesday.
Itay, walk us through your robotaxi expectations. I mean, is Tesla going to operate essentially a cab fleet in major cities across America? Will they need medallions or kind of regulation for that? Or do they just do it sort of like Uber? worrying about the rules later? And what kind of margins will a taxi fleet generate?
Absolutely. We do think they will expand the urban robo-taxi to several cities and beyond. However, we do think the Tesla autonomy story goes far beyond just robo-taxi. To give you some context, the total personal mobility market in the US is roughly a $1.5 trillion market. And rideshare today is a $60 billion market of that. So still pretty small, albeit growing. We think there's a lot of opportunity for Tesla, not only in robo-taxi rideshare, but also in what we call consumer autonomy. Think of FSD features and services on consumer vehicles, whether it's what Tesla's already showed months ago, the vehicle going from the factory to the customer fully autonomously, to a host of other disruptive services, whether it's getting your deliveries or services in the middle of the night, dropping you off at the train station and coming back. A lot of services that they can launch in relatively easier domains, where not only could they earn additional revenue upon that, but also significantly improve the value proposition of the vehicles themselves. So we don't view autonomy as sort of a separate story than the actual EV side, the vehicle demand side. We think they're very much linked. And to your point, one of those services could be to share your personal vehicle with a robo-taxi fleet. And given that we think Cybercab could have a significant cost per mile advantage, they should allow Tesla to launch robo-taxis in under-penetrated markets in the US today, where that lower cost per mile makes the math work from a rideshare perspective. But ultimately, we'll think it'll be a combination of a rideshare network, but also maybe just as importantly over time, a consumer autonomy network that can help generate more revenue and grow vehicle sales. And this could be the year where some of those features for FSD really begin to move the needle on demand in a much more meaningful way than even it has in the past.
I was going to say, just based on the EV business itself, without all these bells and whistles, the trend seems to be moving in the wrong direction. Their share in California has slipped to below 10%. They've also slipped to just be the #3 car maker in terms of the brand's rankings. And then you have across the world, BYD sets their goal of 1.3 million cars outside of China, demand that it feels like it will easily succeed. Itay, how much of the advancements that Tesla is making in FSD, in cybercabs, isn't just a nice to have, but a necessary if the EV business is also challenged by not just the trends, but things like losing a U.S. tax credit?
No, it's a fair point. The near-term EV demand environment, particularly in the U.S., is still challenging. I'm not sure we're going to learn a whole lot more about that on Wednesday. It's a debate that will likely exist before and after earnings. But there's still a number of reasons why we're still optimistic over Tesla's vehicle demand trajectory. One is we're not as bearish on broader U.S. EV demand and consensus. The key point there is we have in the U.S. a much higher vehicle density starting point of 2 vehicles per household, which it makes it actually a lot easier to adopt EVs as more and more households consider moving to a 1 combustion and 1 EV household. We think that's an overlooked tailwind potentially for the U.S. EV market over the next few years. Second, Tesla does have some new products that will annualize this year. Some of the lower priced variants of the 3 and Y, and potentially
but they
other
all
new
look exactly the
products
same,
well.
Itay, and they have looked the same for so long. I mean, I can imagine people starting to buy more EVs if they're cool, right? And these cars are no longer really cool, are they? So does Tesla need to introduce some new products beyond the Cybertruck?
It's possible over time. It's a good point that having different design languages does tend to generate more demand. But we'll still see how these vehicles will do. They do have some changes in the interior and exterior as well. But the third point really is FSD, right? It's some of these features we talked about for consumer autonomy, things the vehicle can do for you, could really become disruptive and it may make the vehicle much more attractive to own when it can do things that the other vehicles cannot. Again, whether it's go drop off something, pick it up, whether it's drop you off at the movie theater, pick you up later, overnight services, car wash service, etc. Lend it to a robo-taxi or peer-to-peer network and earn money on it. So we think that the FSD autonomy side will be increasingly a major and growing driver of vehicle demand over time. And at the extreme, you know, as Tesla continues to build this out, they can have a value proposition that really few or even no other automakers can have for quite some time. And you're seeing the rest of the industry, I think, pick up on this and really begin to drive more kind of consumer autonomy over the next few years. We saw that at CES as well. So it's a big part of the demand story going forward. And we think some of that will start this year.
Itay, we'll see what those earnings bring us on Wednesday. Thanks for joining us ahead of them. Itay Michaeli of TD Cowen. Still ahead, we're going to speak to a pioneer in online car sales. TrueCar founder Scott Painter joins the show.
Let's get a check on how the stock market is doing right now. I'm looking at the move screen here, and we do have decent breadth, right? 350 stocks up, 150 down right now, adding about 40 points to the index. You've got a lot of Mag 7 stocks here: Apple, Microsoft, Google, Facebook, and then Broadcom and Oracle aren't, but they're near enough as damn it. On the downside, Tesla is falling, and we just talked about them with Itay, right now about 2%. And you've got AMD and Intel down, as well as other chip makers, Micron, for example. In terms of the industry group breakdown, they're all up with the exception of the consumer discretion stocks. You've got comm services, the hyperscalers leading the way, materials, utilities, and IT doing well as well. Coming up, we're going to talk to the founder and new owner again of TrueCar. Scott Painter joins us. Buying a car has become way more expensive, and for many Americans also more complicated. Now TrueCar founder Scott Painter is back after taking the company private with a plan to make car buying simpler, more transparent, and more affordable again. Scott is one of the main pioneers, really, of online car buying and of really, I guess, the use of the internet by dealerships and manufacturers. Scott, it's great to have you on the program. Really appreciate your time. I wonder what you want to do differently with TrueCar now that you couldn't have done before, that you didn't do previously. What's the new edge on this?
Well, you know, TrueCar is not a startup anymore. It's been around for almost 20 years in total. And really, TrueCar was founded with the original mission to make buying a car easier and cheaper for consumers using technology. I think today buying a car is more time-consuming, more frustrating, and more intimidating than it's been in its entire 100-year history. I mean, even though we all have more information, more access to technology, you know, when I built TrueCar 1.0, we had to convince investors and partners that the internet was a big deal. Today, everybody who shops for a car goes online. Everybody who goes to market, whether it's a dealer or OEM, goes to the internet. So the way we shop has certainly changed, but I don't think that the experience has gotten fundamentally much better. There's been some real pioneers as well, like Carvana and others. But at the end of the day, buying a car in 2026 is just as bad as it was 5 or 10 years ago, although some things have changed. And then today, of course, we all use our smartphones. The emergence of artificial intelligence completely raises new questions about what's possible and what can we do using technology that we were not able to before. So I really want to return the company to its original mission. I think it needs to focus on helping customers save time and money when buying a car. And we've done that once before. There's some different ways to do it now. But the company also clearly has to deliver a lot of value, because I think retailers are under more pressure than they've ever been. It's not just high interest rates, which obviously affect new car sales more than used cars, because new cars today cost over $52,000 on average. So the cost of a new car has been going up, and therefore 94% of people do not pay cash for their car. So when interest rates are higher, sales slow down. Sort of the old conventional wisdom that you go to the dealership at the end of the month to get a good deal really does hold true. When you drive by a dealership and you see 1,000 cars on the lot, somebody's paying to keep those cars on the lot waiting to be sold.
Scott, I spend a hell of a lot of time, really an unhealthy amount of time, looking at TrueCar, at Auto Trader, at Car Gurus, and then comparing the prices asked for the prices that actually happen on Bring a Trailer and other platforms where I can see the trade. Dealers are always asking significantly more than the car actually trades for. And that creates an annoyance, right? Because I think if I want to go in there and buy the car, I've got to haggle, I've got to bargain. I'd like to have more transparency. Can't we just get to what you know you're going to take at the end of the day? Can TrueCar solve that?
I do believe that truth and transparency start by leveling the playing field, educating the consumer as to what a car really costs. I think that the difference between new and used cars is dramatic because in used cars, the name of the game is variety, and you want to see all the cars stacked up against all the other cars. But in the new car space, you're buying an appliance that comes off a factory assembly line. So the idea that you could go to a dealership and pay a dramatically different price just because you're not informed is a huge problem. So I think where TrueCar has to reclaim its position is really a source of truth, and it doesn't need to operate as a VIN-based marketplace, just simply offering variety of cars. The value proposition was always about saving time and money. And while the cost of a car has moved from about $38,000 in 2008 and 9 when I launched the business to today over $52,000, you still need to expect to save about 10% on the price of a car off of MSRP. That's a big deal, between $5,000 and $10,000 today. And I think most consumers really want to understand what they should pay for the car, what the car is worth, what others are paying. And all that information is available today. It just takes the courage to publish it. And so we're going to return to our roots. We're going to give people the information that they need to understand car pricing as a first timer.
Scott, one of the other differences of when you first started TrueCar and where we are now is the existence of competition. You and Matt both mentioned it, the likes of Carvana or even dealer websites that now exist. How do you want to position TrueCar compared to the competition? Is there some element of price discovery or transparency that you can offer that others can't?
Yeah, well, first of all, I think that TrueCar was not started as a VIN-based marketplace of classified listings of cars for sale, where you can see a million or 2 million cars. It was really about saving time and money through transparency and publishing upfront prices from a select dealer network of dealers that were committed to dealing with customers using technology. So what they gave is an upfront price that was a transactional price that represented real savings. We tended to do that through affinity relationships like USAA, Capital One, the largest direct automotive lender. Today, we bought TrueCar with some real innovators and strategic partners. One of them is PenFed. PenFed, for example, like USAA, committed to military, but unlike USAA, PenFed has a national charter where they can actually lend to anybody, anywhere in the United States. They operate as a nonprofit, so they have about a 200 to 400 basis point advantage over a retail bank. And the fact that they're willing to do it all directly and do it online,
which is huge, by the way. That's a massive savings.
Yeah.
You're partnered also with AutoNation. So how many, dealership partners will you bring into that fold? How many other businesses are going to get access to your platform in that case?
Well, when I was running TrueCar in 2016, we actually took the company public in 2014. We had about 2,500 dealers, and we were nearly $400 million in top line revenue. Right now, TrueCar has almost 11,500 dealers, so it's a much bigger business. There's nearly 8 million in-market shoppers every month flowing through TrueCar. So it is one of the largest automotive marketplaces. But what's interesting about TrueCar is it skews new. About 75% of everybody who goes to TrueCar is looking for a new car, whereas at autotradercars.com, Car Gurus, they're all looking for a used car, 80% plus. So the real moat at TrueCar is that it is a new car auto buying program, not a VIN-based listings marketplace. And that's what we're going to really pivot back to and focus on. And I do believe that having a base of 11,500 dealers that are committed to that value proposition it means that we do not have to go out and recruit for a lot of new dealers thinking differently. We already know who they are. Having AutoNation as the leading, automotive consolidator in the U.S. in terms of size and coverage really means a lot. They were also an owner of TrueCar, but it also reflects that we had to focus a lot on the balance in the system to make sure that not only does this work for consumers, but this also works for dealers. Dealers are looking for ways to reduce costs and sell more cars, and this is really about delivering more sales.
Scott, great to have you on the program. Hope we can get you back soon. And I hope you can join my podcast as well. Scott Painter there of TrueCar. My podcast is Hot Pursuit. And this week, you'll hear this esteemed guest. Mary Barra joins us actually tomorrow on live television at 7:30 a.m. New York time. So we'll break into surveillance with the CEO of General Motors, and we'll be playing out some of that interview as well on Hot Pursuit with Hannah Elliott, where we talk about new cars and used cars and race cars and collector cars and anything related to cars. You can get it wherever you get your podcast.
Did you talk about cars at all, or?
That's pretty much all we talk about.
Got it. I'm very excited. Always a great listen. Let's get a check on your markets this morning. We're about an hour into your trading day, an hour and 8 minutes to be precise. We're up by 0.5% for both the S&P and NASDAQ, with a whole lot of Mag 7 earnings coming. We're going to hear from 4 of them that represent 16% of the S&P market cap. The dollar continues to have a bad day after risk of a dollar-yen bilateral intervention risk. Gold hitting another new record at $5,000 and $5,083 if I can read at all. Matt.
I love it. I love it. It's trilateral if gold comes into the negotiations, right?
Thank you. Sure. Thank
Coming
you.
up, energy services giant Baker Hughes delivers an earnings beat, and this company that used to talk mostly about rigs is talking about data centers now. We'll get the CEO on for you. Lorenzo Simonelli joins us next. This is Open Interest.
Baker Hughes shares in focus after the company topped earnings expectations despite a sluggish environment. The energy services giant remains a key player as the sector navigates shifting market and geopolitical dynamics. CEO Lorenzo Simonelli joins us now. Lorenzo, thank you so much for joining us this morning. And the strength, I mean, we call you an energy services company. Maybe we should be talking more about data centers. Announcing your 3-year data center order target is $3 billion. Should we be thinking of Baker Hughes more focused on the industrial and energy technology segment than the more traditional meat and potatoes of energy services around oil and gas?
Well, Dani, great to be with you. And yes, very pleased with the results of 2025 and also the fourth quarter. And you should be thinking of Baker Hughes as really an energy technology company that intersects the industrial world of data centers, electrification, with also that of energy sources and understanding the molecule itself. And we are benefiting from a portfolio that allows us to play in both. And you've seen the increase in power generation behind the meter, off-grid applications. Data centers, you've mentioned it. We've taken up our target with regards to $3 billion during the course of 25 to 27, doubling our previous estimate, and feel very good about the overall outlook for power generation, electricity consumption, and it doubling over the course of now to 2040.
What's your outlook on the oil price here, Lorenzo? Because it seems to me we're all jockeying for more power. Everybody's paying up for electricity, but oil, as much as I drive, continues to hang out in the doldrums, right? New York crude here at $60.57 with all the geopolitical tensions. How long does crude stay this low?
You know, you look at us in energy, and we've always said, don't try and predict the oil price because it is emotional and it's going to be range bound. As you look at the supply and demand aspects in 2026, again, we see an improvement in the back half of the year. There's enough supply out there at the moment, but as you look at beyond 26, demand continues to increase. Oil is always going to be important. It's going to be core for certain end markets. And so we think it will be range bound, and 2026, again, being relatively soft.
Lorenzo, there's been a lot of optimism over the past couple of weeks in you and your peers about the opportunity in Venezuela. By some measures, you're one of the largest, if not the largest, having the largest base of some of the machinery in the region itself. You've talked to our Bloomberg News colleagues before about optimism in Venezuela. Have you started yet to ramp up production? Are those plans in place to help with the infrastructure build out?
Venezuela is a clear opportunity for Baker Hughes. And again, we have a long history. Just as a reference point, back in 2012, across our oilfield services and also our industrial energy technology segments, we were revenues of 500 million. We've got a very large installed base of existing compressors, engines, oil production, and we see that opportunity being there going forward as well as you look to ramp up production. We have been operating within Venezuela under the license that's available and helping the operators with the license. And we're obviously working closely with the administration and understanding how we go in with the broader portfolio as the legal framework becomes understood, and also as we surely understand the safety of our operations and our employees.
At the same time, $500 million seems like small potatoes for a big company like Baker Hughes, and certainly for the opportunity that exists in Venezuela with the largest oil reserves of any country in the world. How high do you think it could go there in terms of revenue for you? And what kind of guarantees, security guarantees, do you need to see before investing more into that economy?
If you look at it from a 2012 perspective, that was an annual number. And you think what's happened to the production since then, it's been declining, and the infrastructure obviously needs repair. It needs overhaul. So there's a significant opportunity, not just from a OPEX perspective of annual activity, but really the infrastructure improvement going forward. And I wouldn't state a number right now, but clearly it's an opportunity that we see given the reserves that Venezuela has and also the backdrop of experience that we have there. With regards to safety, again, employee safety and just making sure that the right framework is there is important. It was there before, so again, working with the authorities to make sure it's in place. And we have good experience of navigating different environments, as many other companies do as well. So we are optimistic about Venezuela, and we are watching it closely.
Have you had conversations with the administration? How easy and how seamless are they going to make it in terms of things like getting any additional licenses you might need, any support from this administration? What are they willing to back up?
Again, those discussions are ongoing. I think you've seen some of those dialogues and also what's been said by the administration. Clearly, there's a dialogue around incremental licenses, how to invest, how to think about the aspect of also payments, etc. And all of that is being worked on. You've got Department of Energy, you've got the National Energy Dominance Council, you've got the secretaries involved, and so there's a large team that's actively working this.
All right, Lorenzo, thanks so much for joining us. Lorenzo Simonelli there, the CEO of Baker Hughes, talking about their foray into AI data centers as well as investment in Venezuela, potential investment in Venezuela. Coming up, another deadly shooting in Minnesota puts Trump's immigration crackdown under new scrutiny. We'll have the latest from Capitol Hill. This is Bloomberg Open Interest. Now a look ahead at what we need to be watching this week. Tomorrow, earnings picking up with results from General Motors and my interview with Mary Barra.
Of course.
About 7:35, maybe on surveillance. American Airlines also reporting, as well as UPS. Plus, President Trump is set to speak in Iowa. Probably we'll talk a lot about Minnesota. And Wednesday, we'll get a Fed decision, and Chair Powell will hold a news conference. Plus, results from Tesla, Meta, and Microsoft. Thursday, it's Apple's turn to report earnings. And finally, on Friday, results from Chevron and ExxonMobil.
After a second fatal shooting by federal law enforcement officers in Minnesota, cracks are forming inside the GOP. Republicans are beginning to question President Trump's immigration crackdown as Democrats threaten a government shutdown. Joining us to talk about how this is playing out on Capitol Hill is Bloomberg's congressional reporter Eric Wasson. Eric, at first this was an administration that basically said, don't believe what you saw on the camera. These were border agents acting in self-defense. But there's been pushback, and since then, Trump announcing this morning that he would be sending leadership, the border czar, to Minnesota. Is this a president that's getting pushback and changing tack?
He is getting some pushback. It's mostly coming from quarters we've seen before, like Representative Thomas Massey, a gun rights libertarian who's questioning administration rhetoric about the ability of ICE agents to shoot someone who has a gun rather than brandishing a gun. We see Bill Cassidy, someone who's often questioned the president, Tom Tillis, also raising red flags. The key thing to understand, though, is that the Senate Republican leadership right now is moving forward with this spending bill for Department of Homeland Security attached to six total funding bills that would keep most of the government running through September 30th. Democrats are saying they're going to block this, which would lead to another government shutdown after Friday. There's going to be market impacts to that. We would expect the Bureau of Labor Statistics report on unemployment that's due next week to be delayed. We'll see the same sort of impacts to small business and Pentagon contracts being delayed. And in this case, the IRS is starting its tax season, and it would also be among those agencies affected. So we are seeing some qualms. We are seeing the president sort of changing tack a little bit. But I would say right now we're on a collision course for a government shutdown at the end of the week due to Capitol Hill's divisions.
Is there any chance that the president pulls these ICE agents out of Minnesota, or does his base, have no problem with this, or not think it's an issue, and does he double down?
The president can often be very surprising. I was surprised at how quickly he reversed himself on Greenland, for example, talking 1 minute about the option of military force, and the next minute taking it off the table and even removing tariffs. But Greenland's kind of a side issue. Immigration is a core one, and we certainly see members of Congress who are stalwart Trump defenders are urging him not to back down, and also echoing the administration's rhetoric that the person who was shot in this case is domestic terrorist, et cetera. So I think he would be taking a big risk with his base, but he is mercurial and he does change tact, so there's always a chance he could do that.
I asked Tyler this earlier. Are they doubling down on that? A lot of people on the right and Trump supporters have said Alex Preddy was brandishing a weapon, which we know because of the video evidence that he was not. A lot of people in the administration, like Kristi Noem or Greg Bovino, have called him a domestic terrorist. But we know that he was an ICU nurse working for the Veterans Administration, and he was just filming. Are they not backing off of that, of those allegations?
What I would say is that most mainstream Republicans are sort of zeroing in on this idea that there needs to be a full investigation, some saying a joint state and local and federal investigation, while also trying to blame Democrats, saying that the Democrats are causing chaos, that they had open borders that caused cities like Minneapolis to be inundated by undocumented migrants. So there's a lot of blame shifting and sort of coalescing around the idea there needs to be a full investigation. We haven't, interestingly, heard from Senate Majority Leader John Thune or the Speaker of the House, Mike Johnson. They have not issued statements. We are hearing through aides that they're going to try to barrel forward with DHS funding. One important thing to remember, though, is even if there is a government shutdown, these immigration raids and activities will not cease. They're essential, and they're paid for by the Trump tax bill.
All right, Eric, thank you so much for joining us this morning. That's Bloomberg's Eric Wasson. Coming up on the show tomorrow, Matt Maley of Miller Tabak and Paisley Nardini of Simplify Asset Management, plus Tom Fitzgerald of TD Cowen reacts to earnings from American Airlines. And we're going to speak to the CEO of Veolia, the world's largest environmental services company. All of that coming up tomorrow. Along with Matt's GM interview, this is Bloomberg.